Hello, welcome to AleaSoft webinar. My name is Alejandro Delgado, Technical Director of AleaSoft and Associate Partner of Alea Green, and thank you for joining us today in this webinar with the topic Prospect for the Energy Markets in Europe, Spring 2022. Our first speaker today will be Oriol Saltó, Data Analysis and Modeling Director of AleaSoft and Associate Partner of Alea Green, that will analyze the evolution of the European energy markets in these troubled times. Then we have several speakers from EY that have joined us after 1 year from our last webinar together, and that we talk about the financing of renewable energy projects and the importance of PPAs and self-consumption. They are Francisco Javier Sánchez Ramos, Global Client Service Partner, Antonio Hernández Garcia, Partner of Regulated Sectors, and Javier Garcia Seijas, Partner of Infrastructure, Modeling, and Project Finance. If you have any questions at any time during the webinar, please use the Q&A menu, and we will answer them after the presentations. And now, I hope you enjoy the webinar. Oriol, please share your slides.
Good morning. Thank you, Alejandro. Good morning, everybody. I will go straight to the point because we have a lot of, oops, sorry. Let me, as I said, we have a lot of information to show. Okay. Sorry, now my sorry, my PowerPoint crashed. Let me open it again. This always happens in the worst times. Let me again reopen it. Okay. Now let me put the presentation in full screen. Okay, and now I'll share the screen. Sorry for the delay. This means I'll have a couple less minutes to explain all that I want to show. Okay, here. Okay, sorry for the delay. So, as I mentioned, okay, I'll go straight to the point because I have more speakers, great speakers from EY afterwards. I'll cover the first part of the webinar, showing the evolution of the energy markets in Europe in the recent weeks. Very interesting, as you'll see. You all know that we are in a, well, as far as I know, one of the worst energy crisis that we had in history. First, a few words about AleaSoft, in case you don't know our services. We basically offer energy forecasting for services for the energy sector, covering all the European markets, forecasting that goes from the short term, so hours ahead or day ahead, up to the long-term reports that cover up to 3 decades in the horizon. We obviously make forecasting for demand and price for the energy markets, but also renewable energy production, regional demand forecasting, any variable that impacts the energy markets like weather conditions, fuel prices, CO2 prices, etc. And not only day-ahead market forecasting for the day-ahead market, but also ancillary services, intraday markets, imbalances, etc. The methodology that we use for forecasting is our own methodology. It's a methodology of a hybrid nature that combines statistical method from the statistical classics like regressions, econometric model, etc., combined with more advanced models from artificial intelligence, neural networks, etc. The 3 main points that we always like to stress about our methodology is that it is completely scientifically based, so it gives consistent forecasts that keep the coherence over time. And what best we can say that it's a technology that we have been using for more than 22 years now, starting with the Iberian electricity markets and now covering all the energy markets in Europe. So let's start to see how the recent weeks has been in the in the fuels market. I always like to start with a historical perspective of the Brent oil price, because it's kind of this index showing how the global economy is going. And what we have been seeing in just the last weeks, not even the last month, just the last weeks, is an incredible increase, rapid rise in prices. Obviously, all this is related with the invasion in Ukraine and all the restrictions, all the problems, or the fear about the oil supply from Russia. And you can see how we got very close to the maximum historical prices of 2008. So yeah, we can say that it's close to the worst crisis that we have seen. So you can see how after the worst part of the pandemic during the first quarter of 2020, the increase has been quite fast, and just in the last 2 weeks we have seen this incredible rise in prices. Making a zoom in these very last days, you'll see here February the 24th. This is a day that you will see shown in most of the graphs that I will show. It's because it's the day that the invasion of Ukraine started, and when everything, let's say, started to went worst that it was even going. So basically, you can see how Brent oil prices increased by nearly 40% in just a couple, 3, 4, 5 days, basically fearing, as Russia is one of the largest oil supplies at the global level. Obviously, restrictions on Russian economy, bans from importing Russian oil from United States, UK, and other countries. Obviously, this is putting a fear on the global oil supply. So that's why we got this close to 134 dollars per barrel. Just afterwards, as they increased very rapidly, it also decreased very rapidly. We are now back to the level of the $100 per barrel. Today right now is 3% up, but still at the level of $100 per barrel. Something similar we have seen in the gas prices. These are the gas prices from the Dutch hub, the TTF hub. And you can see how just afterwards, the February 24th, prices started increasing very rapidly. We reached near to 250 euros per megawatt hour. This is, in this case, the highest historical price. And you can see how these historical high prices are increasing recently, kind of in an exponential way. So kind of worrying, but just after the day after March 8th, it's this day that you will also see how it has important consequences on electricity prices, where we also reach the highest prices on this date, March 8th, another important date. Just afterwards, we are right now we are back to the level of just above 100 euros per megawatt hour. Right now, 107, 108. In the CO2 emission rights, we saw kind of the opposite. So just after the war started, what we saw was a very important decrease in prices. This was basically as this market has an important component of, say, a speculative component. So basically, investors that just invest in CO2 because they expect the price to go higher. So as war basically introduces uncertainty, we see a lot of this speculative component retreating from the market. So basically, we saw a huge decrease in prices just after February the 24th, back to the level of the 60 euros per ton. Right now, we are again around 80 euros per ton. Now, let's go and see what's the impact of this in the electricity markets. I'll share you the online platform that we have, so we can see online what are right now the behaviors of the electricity market. So this is our online platform that we offer to our clients, where you have basically grouped by markets or by type of variables, all the data, all the information, all the variables needed to understand, to analyze, to historically see all the variables related to the energy markets. So in Spain, we can see this is the electricity market price for Spain since the mid-February, and you can see, if you remember, this is somehow the same behavior that we saw in the gas prices. So basically, after February 24th, that is somewhere here, prices started raising, and here in March the 8th, it's where we get the highest prices in history in Spain. Hourly prices reaching 700 euros per megawatt hour, something that was basically not even possible a few months ago. If we make the base price, the daily average, we reached close to the 544 euros megawatt hour. And basically that you can see all the rest of also the rest of the variables to understand the market, demand, wind production, etc. We can also see, for instance, let's see, Italy is another interesting market because it's having very high prices. Basically, you can see the same behavior. So the highest prices reached in March 8th. Not only electricity markets can also have fuel prices. You can see here the TTF price, that just what we have seen. We can go back a little bit to see how it was at the beginning of 2020, for instance. And you can see how, where we had the lowest prices in history in March, April, May of 2020. Right now we are at the highest levels, as we just have shown. You have also the Spanish gas that has a very similar behavior, oil, coal, CO2, etc. Where else we also have the futures markets. So for instance, we can see Cal 23 for Spain, and let's go back a little bit since the beginning of 2022, sorry, 2020, yeah, 2022, since January, and we see that we haven't seen an increase, let's say clearly, or well, strictly related with obviously the increase in the tension in Ukraine pushed the prices of the futures up, even before the spot price. You can see that already in February 24th, prices were already at the highest levels. And what else? You can. I also have some custom observatories. You can group the variables together as you please in order to make the, let's say, the analysis that you want to perform. Okay. Now this is going to go a little bit slow. Let me see. If not, we can go to the. I also have. Well, now it is really low. When I'm streaming, my computer is going a little slow. Okay, that's Spain, Italy. Okay, no worries. I think it's enough. Okay, let's go back to the presentation. I'll keep showing you. Have some summary slides. Let me see. My computer is kind of struggling right now. Let me me see if I can go back. Okay. So also you can go to our website and see all the reports that we have on anything related to energy markets, that anything that can impact the energy markets, that we can modelize and analyze and extract conclusions. So here we can see the spot prices, the monthly average spot prices in some of the most important European markets. Basically, what we saw is that since October, more or less, August, September, October, prices started going up really fast. We had the highest prices in December. Compared to 1 year above, it was more or less 400% increase in average in some of the markets, little less in Poland and in UK that already had very high prices in 2020, but an average or at least, let's say, 400% increase. In January, prices also started increasing in 2021. So the increase was a little bit less, but still we are talking about increases of more than 200% in just 1 year. And then February, the prices went a little bit back. With most of February was let's say, of stable. So the invasion of Ukraine started at the end of the month. So the average of February was still kind of lower than January. But this very important increase is mostly related to the increase that we had in Spain, because in Spain in February 2021 we had the lowest prices in the whole Europe. That's not a common situation, but that's what we had, and that's why the increase in Spain and Portugal reached more than 600%. So this made the average of all the countries a little bit higher. Looking at the last days since the beginning of the year, so you can see how February was mostly a very quiet, let's say, month. Prices were going down slowly, but then at the end of the month, prices started increasing, and we got our maximums in March 8th, related to the peak in gas prices that we have just seen. But just after a few days later, or a couple days later, in the very same week, we even had negative prices in some country, negative hourly prices, mostly related with the increase in also the decrease of gas prices and the increase in wind energy production in most of the countries. Right now we are still around 250 euros megawatt hour. So again, still very high prices. Let's take a look now at the at the futures market. So this is the forward curve in the futures market for the Brent oil, compared to the forward curve that we saw in our last webinar, that was at the beginning of February, so 5 weeks ago. So in 5 weeks, basically, the forward curves has been following the increase in the spot prices. A little bit different is the situation in the gas prices, where we are seeing, obviously, as the spot prices are increasing a lot, we saw a huge increase, more than nearly 35 euros per megawatt hour in the whole 2022 year, and also a little bit less in the following years. So basically, what we are seeing is that this situation of very high prices that we are seeing, it's kind of getting extended. So first we thought that this was just going to be during the winter. Now we know that this is going to last at least the whole year 2022, and then the levels that we had before this crisis, it looks that they are going to be at least 2025, probably 2026, if everything follows as expected. CO2 futures, as we saw this decrease in the spot prices due to this speculative move. So with a lot of money put out of the market, and what we are seeing. I also mentioned this in our previous webinar, is that what we are seeing is that this forward curve is getting steeper. So we saw an important decrease in the short term, but a little less decrease at the long term. This is something that we are seeing month after month. So as we know, prices of CO2 will get higher and higher. And what we are seeing is the forward curve that is getting steeper. So prices, or at least traders right now, are expecting the CO2 prices to go faster to very high prices. The forward markets, the future markets for the electricity, what we are seeing for Cal 23, so the next year, obviously increases due to the increases in the spot market. And then at the long term, we are seeing no differences basically from 5 weeks ago. So very large impact on the short term, but basically no impact at the long term. And we always get this question: why in Spain the forward curve is so low compared to the rest of the market? Well, we have to understand what are futures market. There is no liquidity in this market after 2023 or 2024 at the most. So these prices at the very long term are just synthetic prices, trade registers, trade nominations that are basically contracts that already include a discount on the expected spot price. So they are not reliable in order to understand what will be the spot price in the future. They are just references, and not very interesting references, or not very robust reference in order to understand the future of the electricity market. And just trying to summarize what are the key elements when we are forecasting the energy markets into the future. So basically, the war is basically introducing uncertainty. This means volatility. We can even talk about macro volatility. So volatility and high prices. And this is the situation that we are seeing in CO2, in gas and oil. And this is all obviously reflecting into electricity markets that are basically in the same situation: very high prices and very high volatility. These scenarios of uncertainty are extending in time. So as I mentioned, what we last year, at the end of the last year, we were seeing just the situation during winter. Right now we are extending this scenario of uncertainty, high prices and high volatility, at least as I mentioned, until 2024, obviously decreasing in time, but at least very present, this uncertainty for at least couple or 3 years more. And at the long term, I usually, in this last sentence, I usually say, at the long term, things are stable. We are seeing no major changes. In this case, as the European Union is committed to reach as soon as possible energy independence, at least from oil and gas from Russia. What we will see probably is an acceleration of this implementation of renewable energy, energy storage, green hydrogen, all these decarbonization targets. We are probably going to see an acceleration. So what the plans that we had for 2030, for 2050 will probably be accelerated in some way. So it's very interesting things to see at the long term right now. And that's all. Just let me invite you all to our next webinar that it's going to be on April 21st, where we will talk about energy storage. We will have the speakers from the Spanish Association of Energy Storage. So you can request the invitation. It's going to be interesting for sure. Thank you, Alejandro.
Thank you very much, Uriol, for that great presentation. Francisco Javier, when you are ready, please, you can change your slide now.
Good morning. Thank you very much, Alejandro. Thank you very much, AleaSoft as well for having invited EY to this webinar that, by the way, is getting or is becoming into a reference in the Spanish market. I understand you can see perfectly my slides.
Yes.
Okay, thanks. Let me again to the audience, please give before moving to the topics we are going to discuss right now with some of my colleagues. Just a brief introduction of our firm, especially in the services that we provide in the renewables sector, in energy in general, in sectors, the renewable sectors in particular. My name is Javier Sanchez. I am the global client service partner of the energy group here in Spain. Just to say that EY is we are a real global firm. And we have a fully dedicated group focused on energy and especially in renewables as well, both in Spain and worldwide. We offer our services across all the what we call the renewable asset cycle, life cycle, and we provide services to both the private sector and the public sector. In the private sector, of course, from large utilities and multi-energy companies to renewable developers, oil and gas companies, non-energy corporations, or financial investors. I would say that the evolution of the services that we have been providing, especially in the last 2-3 years, have been very similar to the evolution that the energy sector has been experienced. Historically, until the last 2-3 years, I would say we provided, of course, mature services or traditional services like transactions, tax services, assurance services. Right now, we are responding to the demand of our clients in different areas that 3 or 4 years ago were not, or we couldn't imagine. I mean, we are providing services in power purchase agreements, advice, supply chain management, sustainability, regulatory economic policies. So we cover absolutely all the areas. And I would like to say that as well, although we can provide services on a very specific situations for specific solutions or specific projects, we like to provide holistic services. I mean, it's not usual that one single person or one single team from one single specialty could be advising one of our clients. I mean, in general, our dedicated team, or in general, in most of the projects, we are involving professionals from different areas. The objective at the end of the day from our side is rather than to be a service provider in specific issues, is to be a partner of our clients. And just to end, I mean, we are very proud to be as well, or we were the first professional, or the first Big Four to announce in January 2021 our commitment with energy transition and our purpose to become net zero by 2025. So energy transition is in all of our minds as well. And this is a clear message for both our people and for our clients. And I don't want to invest much more time, because we have very interesting topics right now to cover. And then, Tono, I turn it over to you. Tono Hernandez is going to cover right now the situation of the regulatory environment here in Spain. Tono, I turn over to you.
Very much. Let's see if my camera is okay. Thank you very much, Javier. 1 second. Now it's okay. Thank you so much. Okay. Let me share the screen. Yeah. Perfect. So my presentation is going to analyze the most relevant regulatory issues in the Spanish energy sector and the prospects, taking into account the difficult situation that we are living today with this invasion of Ukraine and the impact on the electricity and energy prices, like a supply shock in energy with many negative effects on the economy in Spain, in Europe, and in other countries. So first of all, I would say that we are facing a very challenging energy transition. The transition should be understood as the solution and not the problem, this crisis. A great effort in investment is necessary, and in the case of Spain, close to 250 billion euro, and therefore regulation is essential to provide certainty and to provide clear signal to investors. In the case of Spain, for energy transition and climate change, we have 5 main pillars: the so-called recovery, transformation, and resilience plans, with many milestones in the energy sector also, in order to receive the money coming from Next Generation funds and other European Union funds. The climate change law and the planification for 2030. I will see this very quickly later on. And the strategic roadmaps and also strategic projects, the so-called in Spanish PERTES. All of this accompanied with a long-term strategy, 2050, for decarbonization in Spain. So very quickly, this is the content of my presentation, these 7 points: law of climate change, our planification 2030, the main roadmaps and strategic projects, we will see later on, the importance of renewable actions, the importance of permits for access and connection, and the new tenders that has been announced, some measures that the Spanish government implemented last year in order to face the energy price crisis, and the most relevant, the prospects taking into account the European Union regulation and commitments, as we see, we are going to see next week in Brussels. So the first thing is the climate change law, which was passed last year in May, with the targets for Spain, very ambitious targets in emissions, reduction of emissions, renewables, energy efficiency, for 2050 carbon neutrality, and 100% share of renewables in the electricity mix. And this is accompanied by the PNIEC, the planification, the National Integrated National Plan of Energy and Climate Change for 2030. In renewables, doing the zoom in renewables, very short messages. The first one, in Spain, the promotion of renewables have to promote the participation of renewables in all uses of energy until at least 42% of final use of energy. In transport, 28% target. Cooling and heating also important, as we've seen in the Europe Repower Europe EU. Of course, this accompanied also with the renewable gases, and in electricity, 74% of participation. Of this target, mainly the effort will be done in solar and in wind. We see that we will need to add, and from 2020 to 2030, almost 60 gigawatts of capacity. And for this reason, for me, it is very important to underline the importance of the capacity market. There is a draft ministerial order which regulates this new capacity market, which will be needed in order to promote storage and promote firmness in the system, not only from water pumping and batteries, but also allowing the viability of combined cycles. As a result of all this effort, our dependency rate from energy imported will be reduced until 61%. This is very important today, as we've seen with this Repower EU commitment. And then this law and this planification has been accompanied with some roadmaps and the so-called PERTES, the strategic projects. Very quickly, there are 5. All of them has been approved. The one of biogas should be approved in the coming weeks. For hydrogen, we have a target of 4 gigawatts of electrolyzers installed capacity by 2030. Some regulation will be needed that I will analyze later on. In biogas, a minimum of 10.4 terawatt hour per year. That means to multiply at least by 4 the current production. Floating offshore would be also important in Spain, 1 to 3 gigawatts. Storage also 20 gigawatts for 2030 and 30 for 2050. The role of batteries, the role of pumping, and also self-consumption. We have a target of 9 gigawatts for 2030, which could reach to 14 in a very favorable environment situation. For me, this is very relevant. Last year, we duplicated the capacity, the installed capacity, and for the companies, it is very important to analyze deeply their electricity supply in order to find the best offer in the free sector, in the free supplies. Also combine this with PPAs, green PPAs, to reduce the so-called carbon footprint, and also the importance of self-consumption to reduce the cost of electricity, as we've seen this year, and of course, energy efficiency. We have many clients asking us to help them in this issue. And also the PERTES, the so-called strategic projects, very quickly. The main idea of these PERTES is to promote innovation, to promote pioneer projects, and also to promote the decarbonization process and technologies in Spain, and promoting also energy value chain. We have the first most relevant in this area is the one on renewable energies, hydrogen and storage. We have another one on circular economy, which was passed last week, and another one of the electric and connected vehicle. Importance is that in this PERTES, there have been approved some calls in order to receive European Union aid to finance these pioneer projects. For the auctions in renewables, I would say that they play a very relevant role in Spain, but combined also to the merchant plants and private PPAs. The idea is having this, following this calendar, as you can see in this slide, but for the time being, we have 2, one in January and another one in October, with too many participants. The capacity allocations were close to 3 gigawatts in each case. The average price in January was close to 24 euro megawatt hour, and in October close to 31. And it is for me very important because in that month, in October, the prices were much higher. So with this kind of auctions, the participants receive a pay-as-bid and a PPA with the electricity system. That means no counterparty risk. This is for around 12 years. Of course, the rest of the timing of the installation is another business. For the future, we are waiting for 2 new auctions, one for cogeneration. Here, the system would be more pay-as-clear, not pay-as-bid. The participants will bid for a reduction or deduction in the initial investment cost for the system, taking into account the standards that has been regulated. And there is another auction which has been announced for solar thermoelectric. It's small, but it's there. Access and connection is also very relevant. In Spain, we had a problem, and so Royal Decree Law 23 had to do something with the idea to guarantee that the projects were going to be carried out. So it established some milestones to be fulfilled by the owners of the permits. These milestones have been flexibilized in December with another royal decree, and also another royal decree and a circular were passed at the end of 2020 to avoid inefficiencies and avoid speculation, to introduce more transparency, optimization of the networks. They regulated better hybridization, and also they included the possibility of tenders. This is very relevant. It's not a case of auctions, it's a case of tenders, but the Energy Secretary of State wants to, widen the use of tenders to 183 nodes. The idea is that before the end of April, we will have new calls for these tenders, taking into account different criteria, maturity of the project, technology of the project, impact on the environment, and impact on socioeconomic areas. We have one example, which is very relevant, the one of a transition node of Mudéjar, in which we can see here in this slide, the most relevant criteria was the one of socioeconomic impact. We have many clients asking for advice in this field, because in the coming weeks, we are expecting the new tenders, and it's very important to be prepared. We don't know which will be the different, participation of these 4 criteria in the new tenders, but it's very relevant to analyze, the trade-off on return and impact on the territories. And finally, the last topic is the measures implemented in order to face the energy price crisis. Last year, there were 3 main royal decree laws. The first one in June in order to reduce taxes. The second one in September, in order to approve the clawback for gas, the reduction of excess remuneration related to natural gas price, and also more measures related to protect vulnerable consumers. This royal decree was modified on October with Royal Decree Law 23, because this royal decree, apart from giving more attention and more protection to vulnerable consumers, it also solved the problem that in this minoration, as we call it in Spain, in this gas clawback, it was not appropriate to include those generators with contracts, a forward contract with fixed price. So after that, and talking about the prospects for future, we have to take into account these 2 issues coming from the European Union. On the one hand, the approval of Fit for 55, new commitment last July, with a more ambitious target in emissions reduction up to 55% by 2030. That means the revision of many directives, being more ambitious in renewable energies, ETS, energy efficiency and taxation, green taxation, and also Repower EU. This is very relevant for the coming future in Spain and in Europe. Two main targets. On the one hand, to face the energy price increases. For me, it's important that the guidance on temporary tax measures on windfall, the so-called windfall profits. Here it's been very clear that this should be temporary and always taking care of not distorting the ETS and also long-term price trends. This is very relevant. Concerning the other measure is separating gas prices and electricity prices. The idea is to introduce caps in prices. We don't know yet if the caps be in the gas prices or in the electricity prices, and we will see. And also Repower EU to reduce the energy dependency on imported energy, and of course the imports of Russian gas, which is 45% of our imports. In the case of Spain, we are in a very well situation because we have a good infrastructure for regasification and for storage. We are leaders in this within Europe, and we can play an important role. So this Repower EU will mean to promote more renewables, to promote heat pumps, to promote energy savings, to promote hydrogen, to promote biogas, and this would be also important for Spain. And last thing, the potential regulations that could be approved in Spain in the coming days or months. The first one would be the first auction of not emitting management and inframarginal power. It was established in Royal Decree Law 17. The problem with this is that the companies are been announcing that this auction could entail a distortion in the market because they could be obliged to change the energy sold previously to clients, energy clients or industrial clients or to third parties in fixed price to give this energy to the auction. So let's see what's happening with this, because the idea is not to establish new distortions in the market. The other one is transparency. The CNMC is required to publicate a new regulation in order to have more information on contracts, and very quickly in order to finish for the tariff, the regulated tariff. The idea is to change the regulation in order to avoid that this tariff is dependent on hourly spot prices. Also, the capacity market ministerial order should be approved, as I mentioned before. The National Sustainability Fund for the electricity sector, which is expected to withdraw from the electricity system the costs related to renewables and cogeneration, the so-called RECORE. And in order to finish the regulation for roadmaps. And here, for me, it's very important to approve the Royal Decree on guarantees of origin. So in order to conclude, we are in a difficult environment with very huge prices, a supply shock. The energy transition should be understood to be the solution, not the reason of the problem. Investment is needed, and huge investment is needed, and in this environment, regulation will be essential. Thank you very much. I pass the floor to my colleague, Javier.
Hello, it's a pleasure to be here now. And then last but not least, I want to talk about the project financing deals regarding renewals in Spain and how the terms and conditions are being nowadays. So let me share a short presentation. Just one second. Just one second. That's it. So, oops. I want to divide the projects that we are analyzing nowadays in renewable energy in Spain in 4 different categories, types. First one are the subsidized by Royal Decree 413 2014. Later on, the projects with PPAs, projects pure merchant, and projects awarded in the REER tenders. So if we go to the first one, these ones are obviously very easy to leverage. I mean, let's say that they are there is a high appetite by lenders. There is most of national and international lenders actively financing them, and actually they are with high levels till 90%. 80-90%. The debt terms are 22 to 23. The debt service coverage ratios, you can see around 1.2 during the subsidized period. Later on, at the end, in the merchant period, 1.4 to 1.5. And well, let's say that also the pricing and conditions are good, like a river plus 1.6 to a river 2% maximum. Also, they require our interest rate hedge of around 70%, structuring fees 1.5 to 2%. Well, these are all good news. The bad news are first that they are not so much left in the market, because we have been doing refinancing of these kind of assets, and one day this will finish. But we have been very busy doing these kind of deals together with our clients and the lenders, and as you can see, the conditions are attractive. And well, I have to point out also that some of the lenders are concerned or worried that according to the current prices of the energy, they suppose that the developers are keeping the reserve account to give back the money they have received over what was the 7.398. But of course, that will happen. If we move to the projects with the second type of projects, the projects with PPAs, the thing is, okay, this is also a good idea. Banks like them. The leverage are also high if there are a good counterpart risk from 80 to 90%. The debt terms also 22 to 23. Obviously, the debt terms from the 15 to 18, and the leverage till 80%. But the thing is that it's common to have cash sweep and mini permit structures to reduce the terms when to make closer to the PPA maturity. The debt service coverage ratio are 1.15 to 1.35 during the PPA period, and they later on during the merchant period 1.45 to 1.5 using P90. The thing, well, also the pricing and the conditions, Euribor plus 1.75 to Euribor plus 2.5, and interest rates around 70 to 75, and structuring fees around 2%. The thing is that, okay, lenders like it. These are not bad conditions to get financing, especially during the PPA period. But the thing is that, as you can see before, as Tono also explained before, the PPA market is quite volatile. So during the at the beginning of the COVID, the PPAs were too low, and now the prices of the pool were too low, and now the prices of the pool are too high. And even let's see if they probably there will be limitations on the price of the pool. So it's difficult to close PPAs. So because of this volatility. So let's move to the merchant risk. Merchant risk, there is quite a lot. There has been not very much appetite for this, and just a couple of lenders, local banks, or a couple of institutions were interested in doing this merchant risk lending with low leverage, 55, maximum 65, also with maximum terms of 15 to 18 years, also with cash sweep, and with a debit service coverage ratio of 1.45 to 1.50. And as you can see, also the debt conditions are not so attractive as other type of projects, starting from Euribor plus 2.25 to Euribor plus 3.25, even 3.75, and also require interest hedge around 70%. The thing is that nowadays, I think most of the lenders are having a new look at this kind of project, because, as I said before, just a couple of lenders were doing this, or a couple of banks and a couple of institutionals with different approaches. One's more focused on low leverage, and the others more focused on high leverage but higher cost. But nowadays, I think, as there are no PPAs, as the royal decree are not going to last forever, and as there is a need of developing a huge amount of projects, the thing is that many of the lenders are starting to make break-even analysis and other kind of approaches to be able to enter in these merchant risk projects. And finally, we have a combined type of project that this is the REER projects. Those were awarded first in 26th of January 2021. The thing is, the price was a medium price of 24.47 and 25.31 to wind projects. The thing is that, the counterpart risk is fantastic, as is a public one and the Spanish Kingdom. But as you can see, the prices are low, especially taking into consideration today's prices. Yeah. During these 12 years of this agreement, or kind of public PPA, the leverage can be till 80%, and the term 15 to 18, also using cash sweep structures. That will be probably less for sure. And the conditions during the PPA are according to other PPAs, 1.15 to 1.25, and during the merchant risk, 1.45 to 1.50, like in the merchant projects. The conditions are the pricing are like Euribor, starting from Euribor plus 1.75 to Euribor around 3%, and also they require an interest hedge around 70% and structural fees of 2%. So the thing is that this is attractive, as there is a real PPA below. Later on, you will be moving to the merchant structure. And the only thing is that the PPAs are not so good prices, but the counterpart is fantastic. So just to conclude, because the time is running out, let's say that I see some evolution regarding the merchant projects, and I think that there will be coming new lenders to those kind of projects, and let's see how the PPAs market evolutes according to the new measures or the situation that will come after the actions that regulatory governments and the European Union will take according to the pool price and the possible dislinkation of the garage price in the pool price. So that's all from my side. So it's been a pleasure, and also always happy to receive Q&A.
So thank you very much, Francisco Javier, Antonio and Javier, for that great presentation with those very interesting topics. We will start now the Q&A section of the webinar, but since we are already almost out of time, we will answer only a couple of questions. Uriol, I believe you already have a question.
Yes, I can answer one question. There's been several questions that we have been sent by email previously, and now there's also a question in the Q&A talking about the marginal system in the electricity market. So how gas is always setting the marginal price while sometimes there's no much gas production. And now that the European Union is talking about trying to redesign the market and also to be not to have so high impact from gas prices. From our side, what we have always thought is that the marginal system, it's been in place for more than 20 years now, since the beginning of all the electricity markets, some of them more than 20 years ago. And basically it has been working properly. We have seen how the energy mixes have been changing from just no renewables, then now that we are using no renewables, from coal to gas. So it's been the most efficient way when setting prices in electricity markets for some decades, and we think that it's still the right way in order to set prices. And changing the rules of the market right now, when the situation it's kind of critical, it would introduce some regulatory fear. So we think this would impact the investments, because this regulatory uncertainty can introduce as I say, fear and uncertainty in the part of the investment. We are more inclined to think instead of trying to change the market, let's try to change the gas. That is the problem that we are seeing right now. So now that we are in a critical situation, we can think, for instance, if gas prices is what is producing these very high prices in electricity markets, why electricity production using gas, for instance, has to pay CO2 emission allowances right now. So CO2 emission allowances is something that the European Union has introduced. So it's ourselves that are paying ourselves. So for instance, during this crisis, why the gas generation of electricity has to pay CO2 emissions? We can just try for 1 or 2 years to just exclude the electricity generation from gas and cogeneration from CO2 prices. For instance, this would immediately lower electricity prices. So instead of changing the market, just go to the root of the problem and try to solve it from there. That's what we think.
Thank you, Uriol. Antonio, I believe you have a question selected.
Okay, thank you very much. The question was related to the capacity auction draft or ministerial order. It's not a law; it's a ministerial order that was, elaborated last year. We are pending for its final publication. The idea of this regulation, which will need also the approval coming from the European Commission, is to provide Spain with a capacity market. It would be a market through auctions, pay-as-bid auctions, and for different time periods. In principle, flexible period, 1 year period, and 5 years period. This 5 year could be widened until 7 in order to give more comfort to pumping. And the idea is to combine the energy market with this new market, capacity market, in order to help those generators to maintain its viability or to close if they are not needed for the system and they ask for this. Also to promote flexible generation and also to promote storage coming from pumping and coming from batteries. In any case, we are available after the seminar, to the webinar, to give you more information. But for me, the approval of this ministerial order is important. And now the situation is not very, very comfortable because of this shock in prices, but in the coming months, I think would be very important for Spain. Thank you so much.
Okay, perfect. Thank you. And we will answer the remaining questions directly by email. And thank you again, Uriol, Francisco, Antonio, and Javier for your presentations, and the audience for joining. Have a nice day.
Thank you very much.
Thank you. Bye-bye.
Thank you. Bye-bye. Our pleasure.
A pleasure.
Thank you very much.